Hey everyone, Dan Mortimer with eXp Realty of Las Vegas, bringing you another weekly real estate market update. This is for Henderson and Las Vegas markets with data as of June 16th, 2025. Another month is flying by here. We're already into mid-June, coming up on the end of the month. 4th of July is right around the corner. Feels like Memorial Day was just yesterday. And it was, 2.5 weeks ago? Crazy stuff. But we're definitely seeing a little bit more activity in the market. It's very interesting to see. It wouldn't surprise me if we start to see the number of properties going under contract increase. I think the number of new listings is still going to be high, but let's go ahead and dive into the data for the past week so that you can see what is going on in Henderson and Las Vegas. So in the last 7 days, we had 1,082 new listings that hit the market. We had 202 properties come back on the market. That's a number that a lot of people have been watching as deals have been falling through. Buyers are either getting more options or just kind of getting cold feet and backing out of deals. So 202 properties came back on the market in the last 7 days. We had 1,169 homes that had a price decrease of some kind. It could be $1, could be $100, $1,000, $10,000, $100,000, anywhere in between. But 1,169 price decreases. Getting into the under contracts, we had 301 properties go into under contract show status and another 429 that went into under contract no show status. So in total, 730 going under contract versus 1,082 new listings hitting the market. So again, still a decent gap there, still seeing the inventory climb, but the number of properties going under contract stayed pretty steady with all the volatility in the market and concern about interest rates and prices. Still a lot of homes going, just a lot more competition on the selling side. Now, getting into the solds, we had 547 properties that were sold in the last 7 days and another 73 homes that are put into coming soon status. For those of you that are new to the channel, that basically just is kind of a pre-marketing status in our local MLS, means the property will be on the market and active in the next 1 to 30 days, usually quite a bit less than 30 days. Usually it's just a few days, maybe a week while they get everything ready. Now, getting into the numbers of active listings, we currently have 7,328 single-family homes active on the market. We have 1,577 condos and another 1,128 townhomes. So we have crossed over kind of an important, I don't want to say milestone, but figure. We've crossed over that 10,000 number of active listings in our MLS. That's a number that, again, for a long time, kind of represented a balanced market. If we had more than 10,000 homes, it was maybe a little bit more skewed towards buyers. If we had less than 10,000, it was more skewed towards sellers. But the closer we were to 10,000, that represented a pretty good balance in the market. With the number of transactions being as low as it has been really for the last 18 months, but specifically the last 6 months, it definitely represents more of a buyer's market than it has historically, just because there's not as much activity in the market. I think this is one of those things that if you talk to people that have been in the industry for 20, 30 years, they'll say, oh, it's a balanced market. These numbers always kind of mean the same thing. Not to necessarily disagree with that, but things ebb and flow, things change as the market evolves, as buyer demand evolves, inventory evolves. So you can't just say, well, if it's at this number, this is what the market means. You really kind of have to look at the data over a wider period of time, at least a few months, maybe a year or two, to get a better idea of what that number is and what that represents. Because 10,000 homes being on the market back in 2019, sure, that meant it was a little bit more of a balanced market. Things were moving quickly, but we were adding a little bit of inventory here and there, and it was pretty balanced. Now, we've had a pretty consistent trend of at least 300 more homes hitting the market as new listings compared to the number of properties going under contract. That's been a pretty consistent trend for 3-4 months at least. I know at the beginning of the year, the gap was a little bit narrower. We would have weeks where maybe it was 50, 75 homes, more new listings coming on the market than properties going under contract. There were a couple weeks where it was really, really close. And then we had other weeks where it was maybe 100-200 homes. But over the last, I would say at least 90 days, we've seen this pretty consistent trend of anywhere from maybe 275 on the low end up to even over 400 more homes hitting the market than there are going under contract. So it definitely feels like it's much more of a buyer's market. Now, I do want to have a word of caution to buyers that are interested. Just because it's a buyer's market, just because there are more options to choose from, does not necessarily mean that a seller is going to give on every single item that you put into your offer. They may not be willing to give you a significant price discount and closing costs and a big repair request credit, but there are some sellers that may. It really kind of depends on the home and the situation. And if you're looking at buying, I would suggest working with a realtor that can help you to negotiate the best deal possible. But just as kind of a word of caution, a lot of buyers hear, oh, buyer's market. That means I'm going to be able to get whatever I want, ask whatever price I want, and the seller's just going to take it. Not necessarily. Like I said, there are some sellers that are extremely motivated and willing to give a lot on price and other terms. But there are also some sellers that are kind of in a make me move status where, hey, if I get this number and I get these figures, sure, I'll sell the house. But if I don't get that, I'm content to let it sit. So a little bit of a balance to that. But generally speaking, yes, we are definitely in more of a buyer's market. And really what that means is buyers just have more leverage. You can use closing costs to help buy down your rate, make the home more affordable, make your monthly payments more manageable. You can get a little bit of a break on price. And you could get other concessions as well, help with your closing costs, your loan costs, title fees, all kinds of stuff. But again, it really kind of comes down to the negotiation. So I just, as a word of caution out to any buyers that are considering this market, don't just take this as a blanket statement of a seller is going to cave to every single little thing that you want. They are going to try to negotiate. They are still trying to get the best deal possible for them. But the ones who get it understand that this is a different market than we've been dealing with really for the last 4 or 5 years. This is a very different market. And so there's going to have to be a lot more give on the seller side to get a buyer to get into a deal with you. So that is one thing that I kind of wanted to touch on. I've mentioned before the value of new construction communities. A lot of buyers are concerned about high interest rates right now and high prices. There's a lot of new construction inventory that is it's sitting. And so these builders are motivated to move them because every day that it sits completed or close to completion without a buyer under contract to move into it, that costs them a good amount of money every day. So they really like to beef up the incentives as much as possible. Not every builder's like this, but a lot of them are, where they'll offer discounted interest rates. They'll give you a big credit to help buy down your interest rate. They'll offer other things, window coverings, appliances, different stuff like that. So if you are thinking about buying a home, but you're concerned about prices or interest rates, new construction may be the way to go for you. Feel free to reach out. I'll put a link in the description of this video. We can set up just a quick call and I can talk to you about some of the communities available and kind of more about what your goals are, your price range, things like that, just so we can see what communities would be a good fit. But the thing that I wanted to touch on before I went on that long ramble is you'll get some buyers that maybe are concerned about price, but they're more concerned about interest rates and their monthly payments. And this is kind of a recommendation that I wanted to give you, a little inside baseball, I guess you could say. When you are negotiating an offer, you get much more value out of getting closing cost credit than you do on a price reduction. So if you are, let's just say you're negotiating on a $500,000 home, and you are asking the seller for let's just say a $10,000 discount. So you offer them $490, but they don't help with your closing cost credit. That's going to save you maybe a couple bucks on your monthly mortgage, that $10,000 difference. But if you flip the scenario and instead offer them the $500,000 and you ask for that $10,000 as a closing cost credit, well, now you're going to be able to buy down your rate a little bit. That 2% that you're asking for can help to lower your payment quite a bit more. I mean, I would get with a loan officer to get the approximate savings, but I've seen a lot of buyers that have saved anywhere from $75 to $100 up to $300-400, just depending on what that credit looks like, what the buy down promotion is with the lender and different things like that. But it's a good way for you to save quite a bit more on your mortgage payment with essentially the same money from the seller. It's just, and on the seller side, your net ends up being the same. Yeah, maybe you pay a little bit more on closing costs and things that are based on the sale price, but for the most part, your net's going to be pretty close to the same. It's just instead of giving a discount of 10% or of $10,000 on the sale price, you're giving it to them as a credit. So really, from the seller's perspective, it doesn't change things much at all. But for the buyer, there could be huge savings on mortgage. Again, with closing costs and things like that, that can help, but being able to buy down your rate, even if it's just 0.5% or 1/4%, that could save you tens of thousands of dollars over the course of your 30-year mortgage. And again, check with the loan officer. I'm not an expert on that stuff, but just a little inside tip for those that are out there looking to purchase and considering getting some kind of credit help. Look into rate buy downs, talk to your lender, your loan officer, see what options are available and how much you would be able to buy that down. And as you negotiate a deal, try to apply as much of that as possible. Because like I said, that's something that lasts the whole 30 years. It's not like a 1-year thing or a tiered thing where it drops off after a couple of years. It should last for the whole 30 years of the mortgage. And it's not the cheapest thing to buy down, but even just a little bit of a buy down, if the seller is willing to cover that, can save you a lot of money. So hope you guys got some value from this video. Be sure to like this video, subscribe to this channel. I will see you guys at the next weekly update. Apologies, this one ran a little bit long, but just so much to get into. So we'll see how this week goes, and I'll talk to you guys again soon.